It is 2 a.m. and you are scrolling through digital lives that feel impossible to reach. Your bank account feels like it is holding its breath while you watch others thrive online. What if the gap between their highlight reel and your reality is just one hidden skill? Meet Nick, who spends his time studying how ordinary people transform their finances through smart investing. Why does it feel like everyone else has the secret manual for wealth except for you? You might think you need a fortune to start, but the game has completely changed now. With fractional shares, you can own a piece of the world's biggest companies for just pennies. Building wealth today requires a competitive advantage that goes beyond just working harder for every dollar. Imagine harnessing compound interest to turn small, consistent contributions into a massive financial safety net. Most people wait for the perfect moment, but successful investors use dollar-cost averaging instead. They do not fear market volatility because they know that time in the market beats timing. By investing in the S&P 500, you are essentially betting on the entire American economy's growth. Index funds offer a simple way to diversify your portfolio without needing to pick individual stocks. Tools like a Roth IRA provide a tax-advantaged path to keeping more of your hard-earned money. Trying to build wealth with yesterday's savings strategies is like racing a bicycle against a supercar. What if playing it safe with your cash is actually the biggest financial risk you take? Nick discovered that the most successful people focus on systems rather than just chasing quick wins. They understand that wealth is a marathon where the right tools make every step feel effortless. You have the potential to bridge this gap and finally stop living paycheck to paycheck today. But before we bridge that gap, we must discuss why old saving rules are making you poorer. Let's look at the math that is working against your financial dreams right now. The numbers do not lie. The price of existing has gone up significantly lately. Your safety net remains frozen while the world around you becomes more expensive. In 2026, the basic costs of housing have climbed to levels we never expected. Filling up your tank with gas feels like a major blow to your budget. Grocery store receipts keep getting longer while your bags seem to be getting lighter. Even the price of insurance has spiked, adding more pressure to your daily life. You are working harder than ever, yet your bank balance feels like it is shrinking. Is your money actually growing, or is it just sitting there slowly evaporating away? The reality is that average savings accounts only pay about 0.5% interest. That tiny return cannot keep up with the rising prices of everything you need. Keeping money in savings is like trying to walk up a very fast down escalator. While you take one step forward, the economy pulls you 2 steps back. You cannot win a game where the goalposts move 5% every single year. Meanwhile, your traditional bank account only moves forward by half of 1%. This gap is destroying your purchasing power and stealing your hard-earned financial future. To build real wealth, you need a competitive advantage that outpaces this persistent inflation. You need to leverage fractional shares and index funds to start seeing real progress. Investing in the S&P 500 allows you to harness the power of compound interest. Waiting for a better interest rate is a strategy that will leave you behind. Relying on old saving rules is a trap that keeps you stuck in the struggle. If savings accounts are a dead end, where is the money actually going? It is going here, into the assets that build real and lasting generational wealth. Imagine standing at a crossroads with $10,000, deciding where your financial future begins today. Path 1 leads to a traditional savings account, a place often considered safe and secure. By 2026, average savings accounts pay a meager 0.5% in annual interest. Over 10 long years, that $10,000 barely grows, remaining nearly frozen in time. Now look at Path 2, where your money joins the powerhouse known as the S&P 500. This index represents the 500 largest companies, driving growth through consistent market innovation. History shows the S&P 500 delivers long-term average returns of 8 to 10% annually. This difference creates a massive gap that separates the wealthy from those just getting by. The secret engine driving this growth is compound interest, turning small gains into significant wealth. While your savings account gathers dust, index funds are working tirelessly to multiply your capital. You might worry about market volatility, but long-term investors see these fluctuations as simple noise. Using dollar-cost averaging allows you to invest steadily, regardless of whether prices are up or down. Even with small amounts, fractional shares let you own pieces of the world's most successful companies. Placing these assets inside a Roth IRA can further protect your growing wealth from future taxes. This strategy gives you a significant competitive advantage over those who leave money in the bank. Let's visualize the math after 10 years of letting your money work in the market. The cost of doing nothing is the massive potential growth you leave on the table. You are choosing between minimal interest or the significant gains provided by the stock market. This comparison reveals why simply saving is no longer enough to reach your financial dreams. True wealth building starts the moment you move from being a saver to an active investor. But before we dive into the engine of wealth, we need to set the ground rules. I'm Nick, and I spend my life obsessing over how regular people flip the financial script. I'm not focused on billionaires, but on people like us looking for a real competitive advantage. You might wonder why trust a guy on the internet with your future financial goals. It's because I'm showing you the math of the S&P 500, not a get-rich-quick scheme. However, it is important to remember that I am not a professional financial advisor. This content is meant for educational purposes and to help you understand complex investing concepts. While we explore these strategies, remember this content is also created for your personal entertainment. Think of this video as a flight simulator, educational and realistic, but purely for your instruction. I am certainly not the pilot of your actual bank account or your personal investment portfolio. Market volatility is a constant factor that every investor must acknowledge before they begin their journey. We are here to learn how tools like index funds and compound interest actually work. I want to provide the clarity you need to navigate the financial world with total confidence. Whether you use a Roth IRA or dollar cost averaging, the final choice is always yours. Investing involves inherent risk, so treat these lessons as a guide rather than an absolute law. We are building a foundation today that allows you to start small with things like fractional shares. I want to ensure you have the right mindset before we discuss growing your wealth. This disclaimer ensures we are both on the same page regarding the risks of the market. With the ground rules set, we can finally start looking at the numbers behind the fortune. Now, let's look at the actual numbers that turn a few $100s into a fortune. This is where the math stops being scary and starts being your very best friend. Imagine if $300 a month could turn into nearly $1 million for your future. This isn't some complex magic trick. It is the proven power of the S&P 500. You don't need a massive windfall to build wealth when you have time and consistency. Can you find $10 a day to change the entire trajectory of your life? The S&P 500 is an index that tracks the 500 largest companies in America today. Think of it like hitching your financial wagon to the 500 strongest horses in the country. When these massive corporations grow and succeed, your personal wealth begins to grow with them. This collection of industry giants provides a unique competitive advantage for every long-term investor. Instead of picking one winner, you are betting on the collective strength of the American economy. Historically, the S&P 500 has delivered average annual returns of approximately 8 to 10%. While the market moves up and down daily, the long-term trend has always been upward. This steady growth is fueled by compound interest, the secret engine that builds massive fortunes over time. Small, consistent contributions work silently in the background while you live your daily life. Through index funds, you can own a piece of every single one of these elite companies. Let's look at the numbers for a 25-year-old, starting with just $300 monthly. If you invest that amount consistently with an 8% return, something incredible happens by 65. Your total portfolio would grow to over $800,000 through decades of disciplined growth. Most of that total isn't even your own money, it is the growth the market provided. You can start this journey today using fractional shares even if you only have a few dollars. Utilizing a Roth IRA allows your investments to grow and eventually be withdrawn completely tax-free. You don't have to time the market perfectly when you use a strategy called dollar cost averaging. By investing the same amount every month, you naturally buy more when prices are low. Market volatility might seem intimidating, but for a long-term investor, it is actually an opportunity. Staying the course during the dips is what separates the wealthy from the casual observers. If the biggest companies in America are growing, there is no reason you shouldn't grow too. Building wealth isn't about working harder. It's about making your money work harder for you. You now see the math that turns a few $100s into a life-changing fortune. But to get these results, you must understand the difference between playing and investing. Next, we will explore how to protect this growth from the traps of the modern world. Most people think investing is about picking the next viral trend or a lucky moonshot. That is not investing. That is just gambling with a much fancier and more expensive name. People lose money because they do not even know which game they are actually playing yet. Let us pull back the curtain on the manual for wealth we started building earlier today. Are you looking for a quick jackpot, or are you looking to finally own the casino? Speculation is defined as buying an asset purely because you expect hype to drive prices higher. You are simply hoping that someone else will pay more for it later based on trends. It is like betting on which single raindrop will reach the bottom of the window first. Would you really buy a business just because a complete stranger on the internet tweeted about it? Hype is a flickering candle that burns out the moment the crowd moves to something new. Speculators do not care about value. They only care about finding a greater fool to sell to. This approach leaves your financial future at the mercy of unpredictable and dangerous market volatility. True investing is defined as buying a piece of a business due to its actual profits. You are looking for a company's ability to generate real value and grow over a long time. Buying stocks actually constitutes purchasing a real stake of ownership in a functioning company. When you own a share, you are a partner in every success that business ever achieves. This is how the S&P 500 builds wealth through the power of a competitive advantage. Investing is like owning the water company instead of betting on individual drops of rain. You are betting on human ingenuity and the power of businesses to solve problems for profit. This mindset shift is what separates the temporary winners from the truly wealthy long-term owners. If you are an owner, a bad day in the market does not mean your business disappeared. Market volatility is just noise when you understand the underlying value of what you actually own. Fractional shares allow you to own pieces of the world's greatest companies with very little money. Every dollar you put into index funds buys you more ownership in the global economy's engine. Using a Roth IRA ensures your ownership grows tax-free while you build your lasting financial legacy. Dollar cost averaging helps you ignore the hype and keep buying regardless of the current mood. Do not let the noise of social media distract you from the quiet power of compound interest. Stop chasing the next big thing and start building a foundation that will actually last decades. Wealth is built by owners who stay the course while speculators jump from one trend to another. Next, we will see how to safeguard your ownership against the most common financial mistakes. But what happens when it all goes wrong? Because eventually, the market will definitely take a dip. Everyone is terrified of a market crash, but what if those moments are actually massive sales? We have to be honest. Stock investing is not risk-free, and prices will eventually fluctuate wildly. Think of market volatility like a summer thunderstorm that is loud and scary but always passes eventually. After the storm clears, the grass grows back greener, and the entire economic landscape looks much fresher. Historical data shows us that every major market crash in history has been followed by a recovery. These recoveries do more than just bounce back. They consistently climb to reach brand new record highs. Remember the 2008 financial crisis, when it felt like the entire global banking system was finally collapsing? Even that massive crash was followed by a recovery that completely surpassed all previous market price levels. Think back to the 2020 pandemic, which sent the world into a sudden and very deep panic. That specific market crash actually recovered within months, rewarding those who stayed calm and kept their shares. This is why your competitive advantage as a young investor is your incredibly long-term time horizon. In the history of the US market, how many 20-year periods have actually ended in a loss? The answer is 0. Broad market index investors have been rewarded in every 20-year period ever recorded. Why panic over a temporary storm when you are building a financial house meant to last 40 years? Using dollar cost averaging allows you to buy more shares when prices are low during those scary dips. Fractional shares make it possible to keep buying the S&P 500 even when your budget feels tight. By holding index funds in a Roth IRA, you ensure your long-term recovery stays entirely tax-free. Compound interest needs time to work its magic, and market volatility is just a part of the process. When you realize what you actually own, the red days on your screen stop being so scary. Instead of checking the news every hour, focus on your plan and let the math do the work. Growth is not a straight line, but the destination remains the same for those who stay the course. Every billionaire you see today likely started by buying while everyone else was running away in fear. Your future self will thank you for having the courage to stay invested during the darkest market days. True wealth is built on logic and patience, rather than the emotional swings of the daily news cycle. Have you ever wondered why some stocks skyrocket while others suddenly crater into the ground? It all comes down to three magic words that every professional investor uses to evaluate companies. To be a successful owner, you must learn to speak the language of the business world. First, let's define revenue as the total amount of money a company brings in from sales. Imagine revenue like a massive river of cash flowing into a business from every single customer. However, bringing money in is only half the battle for any company seeking long-term survival. Profit is the precious money that remains after the company pays for all its daily expenses. You must ask if a company is just making money or if they are actually keeping it. Next, we must understand the competitive advantage, also known as a company's deep economic moat. This moat prevents other companies from easily stealing away customers or eating into your hard-earned profits. How hard is it for a hungry competitor to convince your loyal customers to switch sides? Apple's ecosystem is a perfect example of a moat that keeps customers loyal to their brand. Once you own the phone, watch, and laptop, switching to another brand feels remarkably inconvenient. It is like trying to move out of a house while all the doors are locked. These three fundamental pillars, revenue, profit, and moats, are what truly determine the value of share prices. Investors will always pay more for businesses that can grow while successfully defending their unique territory. Understanding these terms allows you to see the real business behind the flickering market volatility. Using fractional shares allows you to own pieces of these high-profit giants with just a few dollars. You don't have to pick companies one by one when you use diversified index funds instead. This powerful cheat code involving the S&P 500 lets you own the world's best companies automatically. Imagine trying to pick the absolute best apple in a massive sprawling orchard of thousands. Now imagine if you could simply own the entire orchard with just one single easy click. This is the strategy that beats the experts 90% of the time by keeping things simple. Why try to find a tiny needle in a haystack when you can just buy the entire haystack? This powerful approach is built around index funds, the ultimate tool for modern, effortless wealth building. These unique funds provide you with ownership in hundreds or even thousands of different companies simultaneously. Think of individual stocks like picking out specific pieces of fruit for your morning breakfast. An index fund is the entire fruit salad, where every single bite offers a different flavor of success. If one single grape happens to be sour, the rest of the bowl remains absolutely delicious. When we talk about the S&P 500, we are looking at the 500 largest American giants. This massive list includes household names like Apple and Microsoft, which drive our digital world every day. You also gain a stake in dependable leaders like Johnson & Johnson and the banking titan JP Chase. Even everyday staples from Procter & Gamble are working for you while you go about your life. This instant diversification protects your money from the failure of any one single company or specific industry. If most professional money managers cannot beat this simple strategy, why would you even try to? Statistically, simple index fund investing historically outperforms the vast majority of highly paid professional stock pickers. By choosing this path, you gain a massive competitive advantage without spending hours analyzing complex financial spreadsheets. You can even start small by using fractional shares to own pieces of these expensive global powerhouses. Combining this with dollar-cost averaging allows you to build wealth steadily, regardless of current market prices. While market volatility might feel scary, owning the entire market turns that chaos into your long-term friend. Over time, the magic of compound interest turns these small, diversified seeds into a massive financial forest. Placing these funds inside a Roth IRA can maximize your growth while keeping your future profits tax-free. It is the ultimate set-it-and-forget-it system for anyone who values their precious time. You are not gambling on a single horse. You are literally owning the entire racetrack and every horse. But even the best strategy fails if you let the financial vampires suck away your hard-earned returns. Many people believe you need a mountain of cash just to open the door to the market today. This myth acts like a gatekeeper, keeping millions of potential investors stuck on the sidelines for years. You might look at a giant like Amazon and think ownership is completely out of your reach. In this example, a single share of Amazon stock costs approximately $3,000 to own outright. For most of us, dropping $3,000 on one stock feels like an impossible financial hurdle. If you wait until you have thousands to start, you miss out on the magic of compound interest. But the landscape of 2026 has completely changed the rules of the game for every everyday investor. Modern technology has finally demolished the old barriers, allowing you to start building wealth with much less. Enter the world of fractional shares, the ultimate tool for democratizing ownership in the modern era. Instead of buying a whole share, you can now purchase just a small slice of any company. This means you can start investing in major companies with as little as $50 right now. You do not need $3,000 to benefit from the growth of the world's biggest corporate giants. Fractional shares allow your $50 to work just as hard as a millionaire's massive investment. This strategy fits perfectly with dollar cost averaging, letting you invest small amounts on a regular schedule. Whether you use a Roth IRA or a standard account, the barrier to entry has officially vanished. You are no longer limited by the high price tags of individual stocks in the S&P 500. Even through market volatility, staying consistent with small amounts builds your long-term competitive advantage over time. The massive orchard we discussed earlier is now open to everyone, regardless of their current bank balance. Waiting for the perfect moment or a huge windfall is a trap that kills your future potential. By starting with what you have, you harness the power of time to grow your financial garden. The myth that you need thousands to start is dead, buried by the technology of 2026. Your journey to wealth begins with that first $50, not a hidden chest of gold. There's a silent thief in your portfolio that steals more than market crashes ever could. You have the strategy, but now you need the discipline to keep every dollar you earn. Imagine paying someone a hefty portion of your wealth just to perform worse than a computer. Actively managed mutual funds often charge you between 1 and 2% in annual fees every year. In contrast, index fund fees are frequently less than 0.1% of your total investment. Would you knowingly hand over a huge chunk of your future just for a brand name fund? A tiny 1% fee difference can cost you hundreds of thousands of dollars over 30 years. This small fee is actually a massive hole in your bucket, draining your hard-earned compound interest. Unlike that measly 0.5% bank interest, these fees are working aggressively against you. To build massive wealth, you must combine low fees with a habit called dollar cost averaging. Trying to time the market is like attempting to jump onto a speeding, unpredictable moving train. Dollar cost averaging involves investing the same amount of money at regular intervals regardless of market price. This strategy is like standing on the platform and letting the train pick you up every month. You stop worrying about market volatility because you automatically buy more shares when prices are lower. Investment success isn't about being right once. It's about being consistent forever with your financial strategy. The general rule for retirement investing is setting aside at least 10 to 15% of income. Automating this process ensures you build wealth consistently without ever having to guess the market's direction. Using fractional shares ensures that every single dollar you contribute starts working for your future immediately. This disciplined approach gives you a massive competitive advantage over investors who panic during every dip. Success comes when you stop guessing the market and start relying on a system that works. By focusing on the S&P 500, you turn the stock market into a reliable wealth-building machine. Stop chasing the next big moonshot and start embracing the steady power of consistent, low-cost growth. Your future self will thank you for the thousands of dollars saved by simply choosing lower fees. Remember that the most powerful tool in your financial arsenal is the time you spend in the market. While discipline builds wealth, choosing a Roth IRA ensures your growing fortune stays completely government-proof. While your Roth IRA protects you from taxes, a hidden enemy is still lurking in your portfolio. You might see a tiny number like 1% and think it is practically zero. But in the world of investing, that tiny decimal is actually a massive hole in your bucket. Many actively managed mutual funds quietly charge fees ranging from 1 to 2% every single year. On the surface, paying 1% for professional management sounds like a fair and reasonable deal. However, those small numbers are designed to distract you from the true cost of your future. Contrast this with high-quality index funds, which often charge fees of less than 0.1%. That 0.9% difference might look like pocket change at first glance today. But when you let compound interest work its magic over 30 years, the math becomes terrifying. Every dollar taken out for fees is a dollar that can never grow for you again. Over a long career, a 1% fee difference can drain hundreds of thousands from your returns. You are essentially handing over the keys to a luxury home just to pay a manager. This is the competitive advantage of low-cost index funds that the wealthy use to stay ahead. Think of it as a silent leak that slowly drains your life savings while you sleep. While market volatility is temporary, these high fees are a permanent tax on your hard-earned wealth. You could lose decades of growth simply by not reading the fine print on your accounts. Financial institutions count on you being too busy to notice these small, compounding wealth killers. By choosing funds with lower expenses, you keep more of the market's total consistent growth. This shift ensures your dollar-cost averaging strategy builds your empire, not someone else's. Tracking the S&P 500 through low-fee funds is the most efficient way to capture market gains. Using fractional shares helps you start investing, even while these fees try to eat your lunch. Don't let a tiny percentage point stand between you and the retirement you actually deserve. Mastering the math of fees is your final step toward achieving real, lasting financial freedom. This is the single best gift the tax code has ever given to someone starting from zero. How would you like to tell the government no thanks when they want your investment profits? Imagine reaching your $800,000 goal and keeping every single penny for yourself. In a traditional brokerage account, the IRS waits to take a cut of every profit you sell. These capital gains taxes can silently erode the mountain of wealth you worked so hard to build. But retirement accounts like 401 kiloseconds and IRAs were designed specifically to give you a massive tax advantage. Among these powerful tools, the Roth IRA stands out as a true champion for the individual investor. When you contribute to a Roth IRA, you are using money that has already been taxed today. Because you pay the tax upfront, you are effectively locking in your future freedom from the IRS. Think of it as a financial shield that protects your growing assets from any future tax hikes. Whether you hold index funds or the S&P 500, the government cannot touch your growing gains. As your money grows through compound interest, every bit of wealth you generate is protected by law. This is the ultimate climax of your strategy. Your investment gains are officially tax-free forever. Whether your account grows by thousands or millions, every dollar of growth belongs entirely to you. Once you reach retirement age, your withdrawals remain completely tax-free, just as you planned. Why pay taxes twice when you can pay them once and be finished with them forever? To make this dream a reality, you need to know the specific rules for the road ahead. For 2026, the Roth IRA contribution limit for individuals under age 50 is $7,500. While that big number might seem daunting, it breaks down to less than $600 per month. By utilizing dollar-cost averaging, you can hit this limit while navigating any market volatility with ease. You can even use fractional shares to ensure every penny builds your tax-free mountain of wealth. You are building a competitive advantage that most people will never take the time to understand. You now have the map. Let's see what businesses you're actually going to own inside your orchard. Look around your room right now because you are already a customer of the world's greatest businesses. Instead of just buying their products, imagine owning a piece of the companies you use every day. Let's make this real. Investing isn't just tickers on a screen, it is the world around you. Think about the giants inside the S&P 500 that power your life from morning until night. Did you know that Coca-Cola sells over 2 billion servings of their beverages every single day? Every time someone cracks open a cold soda, a tiny fraction of that profit belongs to you. This massive global reach gives them a competitive advantage that few other companies can ever match. Now consider the magic of Disney, a company that owns legendary theme parks and massive movie studios. From beloved animated classics to blockbuster franchises, their streaming services bring stories directly to your home. Because they entertain the world, Disney generates billions in revenue that flows back to their owners. Moving from the living room to your pocket, we find the incredible tech giants shaping our future. You likely have an iPhone nearby, but why just use it when you can own the company? Apple is an incredibly profitable company that has mastered the art of creating products people love. Their ecosystem creates a moat, ensuring that compound interest works for you as they grow. Then there is Microsoft, a dominant force that powers the software running on almost every office computer. They also lead the way in cloud computing, providing the digital backbone for businesses across the globe. When you buy index funds, you aren't just betting on one company. You own all of them. Thanks to fractional shares, you can start owning these powerhouse businesses with just a few dollars. By practicing dollar-cost averaging, you build your stake in these giants through every market cycle. Even during market volatility, these companies continue selling products. making movies, and powering the world. Their competitive advantage ensures they stay at the top, even when the broader economic weather turns cold. Holding these champions inside your Roth IRA means your share of their success grows completely tax-free. So the next time the screen turns red, remember the real-world value you are actually holding. You aren't just trading stocks. You are owning the engines that drive the entire global economy forward. Most people run out of a store when prices drop 20%, but you should be running in. This is the mental shift that separates the 1% from everyone else in the financial world. If your favorite pair of shoes suddenly went on sale today, would you be sad or celebrate? Think of market volatility as a massive Black Friday sale for the companies you already know and love. When the screen turns red, the world sees a crisis, but the wealthy see a rare buying opportunity. Remember our oak tree analogy, where the sapling does not care if it rains or storms today. That tree is focused on 20 years from now, growing stronger roots while the temporary weather passes. Historically, every major market crash has been followed by an eventual recovery to brand new record highs. Broad market index investors have been rewarded in every single 20-year period throughout stock market history. Using dollar cost averaging allows you to buy more shares when prices are low and less when high. This strategy turns the S&P 500 into a wealth-building machine that works even while you sleep. By holding index funds, you are betting on the collective ingenuity of the world's most successful businesses. These companies have a massive competitive advantage, constantly innovating to stay ahead of the global economic curve. You can start taking advantage of these sales immediately by purchasing fractional shares with just a few dollars. Are you going to be a buyer or just a bystander when the next big opportunity arrives? Every dollar you invest during a dip fuels the fire of compound interest for your future self. When you buy these sales inside your Roth IRA, every single cent of growth remains tax-free. It feels scary when headlines scream about a crash, but history tells a much more optimistic story. Stop viewing your portfolio as a fluctuating number and start seeing it as your growing digital estate. The market rewards the patient and the disciplined who refuse to let fear dictate their financial destiny. The only thing left is to take the first step, and in 2026, it is easier than ever. No more excuses. Here is exactly how you start your journey toward real wealth today. You don't need $3,000 for Amazon. You just need 5 minutes and a smartphone. Technological advances in 2026 mean opening a brokerage account takes less time than making a sandwich. Gone are the days of complex paperwork and waiting weeks just to enter the stock market. Leading platforms like Fidelity, Charles Schwab, and Vanguard have made the entire process completely seamless. These major brokerages are designed to get you from the sidelines into the game almost instantly. You are no longer held back by expensive fees that used to drain small investment accounts. In 2026, commission-free stock trades ensure that every single cent you invest works solely for you. This is your competitive advantage, allowing you to build a portfolio without losing money to middlemen. But how do you handle those massive stock prices that seem completely out of your reach? When a single share of Amazon costs $3,000, it can feel like a closed door. This is where fractional shares change the game, letting you buy exactly what you can afford. Investing in fractional shares is like buying a slice of pizza instead of the whole pie. You still get the same flavor of growth without needing a massive upfront pile of cash. With as little as $50, you can own a piece of the world's most powerful companies. This removes every barrier, making the stock market accessible to anyone with a few spare dollars. Are you going to wait for the perfect time or finally make this the perfect time? Every moment you spend hesitating is a moment where compound interest is not working for you. Open your account, claim your fractional shares, and start building your legacy one slice at a time. Setting up your account is the first step toward reclaiming your time and your financial freedom. Use these tools to buy index funds or individual stocks through easy, small-scale fractional shares. This is the manual for wealth in action, turning small, consistent steps into a massive future. Your future self will either thank you or regret this moment. Which one will it be? You have seen the math, the businesses, and the path. Now it is time to take action. The wealth gap is undeniably real, but you now possess the essential tools to bridge that divide. Remember that 2 a.m. scroll where everything felt out of reach while you compared yourself to others? That feeling of being stuck ends today because you are choosing to become an owner, not a consumer. Wealth is like a mighty oak tree that requires patience and deep roots to weather any storm. The best time to plant your tree was years ago, but the second best time is right now. I am Nick, and I study how ordinary people transform their financial lives through the power of investing. My goal is to ensure you never feel lost in the complex world of finance and market volatility. Building a portfolio through index funds is the most reliable way to capture consistent growth over many decades. By mastering your Roth IRA, you are giving your future self the ultimate gift of tax-free financial freedom. Every dollar you invest today using compound interest becomes a tireless soldier working for your future success. Do not let the fear of market dips stop you from building your own generational wealth and security. Commit to your financial education by subscribing so you never miss a step on this important journey. Consistent action through dollar-cost averaging is your secret weapon for winning the long game of wealth. Using fractional shares allows you to own the world as greatest companies with whatever amount you have today. You are no longer just watching from the sidelines. You are actively building a massive competitive advantage. True transformation does not happen overnight, but it starts with a single decision to keep showing up. Stay curious and keep learning because your financial journey is just beginning to gain its momentum. Are you truly ready to stop scrolling and start building the life you have always dreamed of? I am Nick, and I will see you in the next one as we continue this journey together.